Ladies and gentlemen, good day and welcome to Alkem Lab Q1 FY2025 earnings call hosted by Motilal Oswal Financial Services Ltd. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Tushar Manudhane from Motilal Oswal. Thank you, and over to you, sir.
Thanks, Siddhant. Good evening and a warm welcome for 1Q FY25 earnings call of Alkem Laboratories. From the management side, we have Dr. Vikas Gupta, CEO, Mr. Nitin Agarwal, CFO, and Ms. Purvi Shah, Head of Investor Relations. Over to you, Vikas, sir, for the opening remarks.
Thank you, Tushar. So good evening, everyone. Earlier in the day, we have released our financial results, press release, and investor presentation, which are also posted on our website. We hope you all had the opportunity to review it. Before we proceed with this call, we'd like to remind everyone that this is being recorded and the call transcripts will be available on our website. We'd also like to add that today's discussion may include certain forward-looking statements which must be viewed in conjunction with the risks that our business faces. And after the end of the call, if any of your queries remain unanswered, please feel free to contact us. I now request Dr. Vikas Gupta to discuss the quarter's highlight and future strategy. Thank you, and over to you, sir.
Thank you, Purvi. Good evening, everyone. We really appreciate your presence for today's first quarter FY25 earnings call. I'll start by presenting an overview of the operational and financial achievements for the first quarter. And after this, we will be happy to answer your questions and engage in a discussion. We are happy that our efforts to improve the profitability have started paying off and we have seen a marked increase in margins during the quarter. We are committed to maximizing our EBITDA margin by carefully managing our product mix, controlling costs, and taking advantage of the favorable raw material pricing environment. The domestic business is our stronghold and we expect to build on it by furthering the growth of our large brands and bridging the portfolio gaps. Simultaneously, we are also focusing on growing our business in emerging markets. During the quarter, one of the important developments was the successful resolution of USFDA's Form 483 at our Baddi facility. At Alkem, we remain steadfast to prioritizing quality and regulatory compliance. Just to give you a few highlights of first quarter, this has set a good beginning for the whole financial year in terms of profitability improvement for the company. We are pleased to announce the successful resolution of all the observations that we had received from Baddi facility. This exemplifies our unwavering commitment to adherence and regulatory compliance. Our EBITDA margin improved by 700 basis points as compared to last year Q1. So from 13.1%, we have improved it to 20.1% for the quarter. Net profit after minority interest for the quarter stood at rupees 545 crores. According to IQVIA, we have registered a growth of 8.4% YOY compared to the IPM growth, which grew at 8.7%. So we are more or less in line with the market growth. We outperformed the IPM in 6 therapies, which is anti-diabetic, neuro and CNS market, the GI market, dermatology, and the VMN therapy. And our ranking has improved in neuro and respiratory therapies. We aim to sustain and carry forward the momentum in the coming quarters for this financial year. Thank you for your patient listening, and the house is open, for any questions.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Kunal Dhamesha from Macquarie. Please go ahead.
Hi, good evening. Thank you for the opportunity and congratulations on a good set of numbers. One question on this product called Mirabegron. I believe we have a tentative approval for this product. Should we bake in as a near-term opportunity for us?
So, Kunal, thanks for your compliments. And, on Mirabegron, as I had spoken on the last call as well, one or two companies have launched it and they are under litigation, whereas we are bound by the settlement agreement that we have with the innovator. So, unless, the final outcome of all the litigations on the patent, are clear, we would not be, because we are bound by the settlement agreement, I don't see it getting launched, before the agreement date, and which would be somewhere, I would say 26 or 27, somewhere around that time.
Okay, sure, sir. That is helpful. And in terms of our EBITDA margin, which is tracking around 20% in this quarter, and we had given full year guidance or a medium-term guidance that every year we'll improve it by 100 to 150 basis points. So where do we stand? Is there a meaningful change in a way we look at profitability now for our business? And what has led to this meaningful improvement? What has driven this meaningful improvement for us in this quarter?
Yeah, so I will begin by picking up the last part of your question. The reasons for this improved profitability, one is a good product mix. Second is, improvement in the API pricing. So these are, and of course, strong cost control initiatives, that have been running for various quarters within the organization. So I would say these are the reasons for this significant improvement that we have seen. As far as the overall profitability numbers, I've always maintained that we'll continuously be improving it on an annualized basis. Of course, for the yearly guidance that we have given in the past, that remains the same, which should be somewhere around a similar number, overall number that we had in the previous year as well, around 18% is what, we have clocked. Because as I mentioned that though operationally, we would be improving it by, say, 100 basis points year on year, but we are making investments into our new business opportunities, and that would, say, require some investments in the future growth opportunities. Because of that, our guidance has been close to 18%, and we maintain the same for the year, for the rest of, for the balanced part of the year as well. So on an annualized basis, we will be pretty much in line with the guidance that we have given.
Sure, sir. And one last thing from my side, in terms of the forex gain or losses, can you highlight that number for this quarter and where is it baked into our numbers?
So, of course, we've not had, we never get very, granular breakup, but this is mostly from Chile this year, in this quarter, that we have had it to the tune of 15 crores, as a forex gain. So, that is reported as part of other income. Yeah. So that is not part of EBITDA. So that features in the other operating income rather than, other income, and not in EBITDA.
Sure, sir. Thank you for that and all the best.
Thank you.
Thank you. The next question is from the line of Bino from Elara Capital. Please go ahead.
Hi, good afternoon. Just following up on the previous question on margin. For the full year, I just heard your answer to the earlier question. Does it mean for the full year EBITDA margin you are expecting similar to last year's 18% or 100 basis point improvement on top of that, which makes it 19?
So what I said is that operationally, we would be improving it, but because we have new investments to make in the newer growth opportunities, and some part of it will also be, on the OPEX side, so which will dilute our EBITDA, by, say, another 1%. So net, what we would arrive at should be somewhere around 18. But of course, if the API environment gets, even more favorable, then, we may look at some upside, but as is basis, currently we are maintaining our guidance of around 18.
Understood. Second, you mentioned that there was a favorable API pricing environment. Do you mind calling out a couple of APIs where there has been significant pricing reduction which has helped you?
We had, say, for example, dapagliflozin, we had sitagliptin. These are now substantial value products for us. And we saw significant reduction in some of these, molecules on the API pricing, and we expect them to, stay there. So, for the balance part of the year, even on the paracetamol, side, we saw some softening. Of course, not as significant as we saw on the other two, but I think these are some of the, products that I would like to call out.
Understood. And finally, any change reduction in penicillin G prices that has happened in the
so Pen G, even we are eagerly watching, like always, I would say. We are yet to see any impact of Pen G pricing, so to say. In fact, in the recent times, I'm seeing that Pen G prices are even, seeing a marginal, increase. So unless we see the large Indian player coming up in market with the offerings, I don't think we are seeing softening in the China suppliers on the Pen G.
Got it. Thank you very much.
Yeah.
Thank you. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Neha Mampuria from Bank of America. Please go ahead.
Thanks so much for taking my question. My first question is on the gross margin. Since you mentioned the API price environment and product mix, while the product mix can change quarter on quarter, just wanted to get a sense on, how much of this gross margin improvement that we've seen is sticky, meaning, that assuming that API pricing remains where it is, you don't see any further improvement in that. How much of this could sustain, even if the product mix becomes inferior over the rest of the quarter?
So I see the API pricing, remaining more or less stable now. So I'm not foreseeing any significant change on the API environment. But as far as the product mix is concerned, of course, in the Q2 and Q3, we see our, anti-infective portfolio features, which sort of changes the product mix. So in terms of the product mix change, might impact margins, for 2 quarters, by say 2%. That's the kind of estimate that we have and that we may see. But on the API pricing, I see it quite stable. In fact, if this Pen G thing works to our favor in the coming quarters, we may see, an improvement over there. But otherwise, as is basis, this is what our sense is.
Okay. So just to clarify, so last year we saw about 61% margin in the entire year. So given the benefit of API pricing, that what we have reported in the quarter, that is already benefiting us by 100-150 basis points. Is that a right assessment?
So, Neha, you're right that last year our gross margin was 61%. This year, considering the favorable product mix and our better margin in US market and also the further reduction in API, we see further improvement of around, say, 150 basis points in our gross margin for the full year. Definitely, quarter one was better because of, again, the product mix. The domestic contribution was higher as compared to international.
Okay, that's helpful, sir. And my second question on the investments in the future growth opportunities that you've talked about, the 100 basis points. If you could highlight, what these opportunities are, is this the CDMO business that we talked about? So where essentially are we investing this? How long do you think this investment continues, and when do we start seeing revenue from these opportunities?
So as we discussed in our last call also, we are investing in our Indian US facility. This will be mainly for the CDMO business. The total investment is around between 400 to 450 crores. And as we also highlighted in last analyst call, that since it will take some time for this business to actually break even, so in this year there may be some amount of losses which business will incur, and maybe in say first few quarters of next year also. But we are very hopeful that we want to build this business, and maybe from FY26 itself we will see a positive return from this. But this year there will be some impact because of this.
Understood. Okay. And FY26 is when you will break even on it.
Yes.
Understood. And my last question is on the India business. I know I've asked this before also. Some of our larger therapies, pain and anti-infective, we seem to be growing slower than the market. These are fairly large therapies for Alkem. I know we're doing very well in the other parts, other therapies, but anything that you can highlight on what we are trying to do to, address the, lower growth in this segment versus the underlying market?
So for the past, few quarters, we had seen some market also sluggishness as far as, these therapies were concerned. I'm hopeful, and I'm seeing a trend as well in the previous quarter also. It was better than the previous the quarters before. And now I am expecting that from Q2 to Q3, we should start getting decent growths on our large portfolio, and that is why we are bullish about our overall domestic performance. So I think it's a good progress that we are making month on month, quarter on quarter, and we should see even these large therapies beginning to contribute to our overall growth.
Implying that these will grow in line with the underlying market? Would that be fair to assume?
These are our leadership positions in many of these segments. So, at least we will be in line with the market growth as far as these therapies are concerned.
Yeah, sorry, sir. I must have missed this, but what's the growth guidance that we've given for the India business? Have we mentioned that? I joined the call a little late.
So we've always maintained in line with the market, what will be our growth, and which should mean that I'm expecting the market to grow somewhere between 8 to 10%, and should be similar, for us as well.
All right. Thank you so much.
Yeah.
Thank you. The next question is from the line of Virat Shah from Motilal Oswal. Please go ahead.
Hi, good evening. Thank you for the opportunity. So my first question is on price volume. If you could let me know regarding the price volume and new launches growth in domestic formulation segment.
So in domestic, we have had a volume growth of close to around 1.5%. We have the new launches have contributed to around 2.5%, and balances are, I would say, price growth, which is again close to 2.5%.
Okay. Can you also let me know regarding the price erosion in base business for US generic?
So, like I've always maintained, the US generic, is seeing a single-digit price erosion. That trend continues even for this quarter. So we are seeing, that kind of price erosion in our US businesses.
Okay. And regarding Pen-G, so apart from Pen-G, how do you see the lower RM cost benefiting Alkem?
So there are certain other APIs also, which I see that even going forward, we could see some softening, but this is something which is difficult to predict. So some of the API prices, the molecules that I called out on the previous question, we have seen definite reduction, and that should start, that has started showing the impact, in our numbers as well. So I would say that is more sustainable. But I'm quite hopeful that in the coming quarters we should see, few more products where the API pricing environment should get more favorable. But I'll be able to give specifics only when they start, giving us the real benefit.
Okay. And regarding the employee cost, there was a 1 billion increase in employee cost sequentially. So if you could let me know the sustainable rate which we can consider for that.
So I think that is largely the inflation-related increments that we have generally for our employees. So it is pretty much in line with what we had anticipated or budgeted for the year. So there is nothing, abnormal that has come in as far as manpower increase.
Okay. And if I could put in one more last question, the R&D expense, it was lower for the quarter. So how do you think for FY25 on an absolute basis it would be as percent of sales?
The first quarter is always within the range of 4.1% because, most of our filings are loaded towards Q3 and Q4. So the annual spend, will be within the range of 4.5 to 5%. And in terms of absolute, we will continue to keep it under, that percentage. So that is what we have been always maintaining.
Okay. Thank you so much. That's it from my side.
Thanks.
Thank you. The next question is from the line of Bharat Shelley from Equirus. Please go ahead.
Yeah, hi. Thanks for the opportunity and contact for the discussion. I just wanted to understand on the margin guidance again. So in the last quarter, when you mentioned that we'll be maintaining 18% margin, at that time we were estimating that our gross margins will remain more or less flattish at around 61. Now, considering we are increasing our gross margin guidance to 62.5, yet our EBITDA margin guidance more or less remains same. So is there anything which I am missing out?
So if you look at our last year results, the quarter one gross margin was lower as compared to the other three quarters. Actually, the API prices impact we started seeing from quarter three and quarter four, and also a favorable product mix. So if you look at quarter four margin of last year, quarter three margin of last year, it was better than quarter one. And this improvement in gross margin will continue or has continued in quarter one, and that is why we have shared that our overall guidance for the year will be 62.5. So last year was by a lower gross margin of quarter one.
Right. So in the first quarter, when we had guided for 18% EBITDA margin, at that time we were estimating our gross margins to be around 61. Now, since our gross margin guidance has increased by 150 basis, yet our EBITDA margin guidance more or less remains same. So I am just asking why that benefit is not flowing to EBITDA. Is there any incremental cost which you are putting?
Sorry to interrupt. In our last call also, we have shared that our gross margin for the full year will be in the range of 62 to 62.5%.
Okay. And on Milbitrig, actually, I thought that considering two players have already launched a drug, that would have triggered our settlement. Isn't that
Yeah.
So what I'm asking is, there are two players who have launched Milbitrig. Isn't that going to trigger our settlement?
No. So, like I told you, they are also under litigation, and we are bound by our settlement agreement, which clearly mentions that we can launch it only when after the final outcome of all the patent laws, patent infringement that has so we will be launching it only after that. There is a at-risk launch. I think both the players are under litigation with the innovator. So we will be waiting for the final outcome of the litigation.
And because in case let's say if those generics win that case, will it trigger our launch?
See, I will just wait for all the litigations related to any patent for Mirabegron to get over, and it's only after that we will be getting into the market. And there are various litigations I think that are going on for different patents with regards to Mirabegron. So once we are bound by the settlement agreement, in a manner that once all the litigations are over, we will enter the market. So that's when we will enter.
Okay, that's helpful. And on again on the domestic business,
Mr. Bharat, we request you to get back to the question queue for any follow-up questions. The next question is a follow-up question from the line of Kunal Dhamesha from Macquarie. Please go ahead.
Hi, thank you for the opportunity, sir. In terms of US outlook for FY25, in terms of product launches and your growth expectation, if you could provide some color here.
So, in terms of our US growth, I've always maintained we are looking at a single-digit growth, from US market. In terms of the new launches, we launched in generic suppressant in Q1. In Q2, we've just introduced Dabigatran, and amongst the significant ones, I think that should be the one which we are pretty hopeful, which should start, showing impact on revenue in Q3 and Q4. So that's about the new launches. With regards to the filing, I look forward to around 8 to 10 filings that we would do, in the current financial year. But a large part of it will come in Q3 and Q4. So that's how I think our overall filings for the US would be.
And that because of that, are we expecting our R&D expense to basically inch up to 4.5 to 5% versus 4.1% in this quarter? Is it?
Yeah, because it's the phasing of the spend is like that. Because year end we will end at between 4.5%.
Sure. And sir, one on the ROW business, the other international market business, which has just seen a top line growth of 2% year on year. So is any particular geography wherein we have seen some issues, or how should we look at from an FY25 perspective for this business?
No, so 2.2% is not from the ROW. In fact, the ROW markets, the emerging markets, and the European, some of the European markets, we are seeing very good growth. Above even 60% kind of growth. But their base is right now not so high. But we want to develop those markets for future, because these are the markets where we get much better profitability, as compared to the US market. So ROC is very good, from those markets as compared to the US market. And that's what we are working on building, top line from some of the non-US markets. So especially the emerging markets and the some of the European markets. So I think that's what we are now focusing on in terms of our international business, and we will continue that focus, very strong.
Just to add, I think you are talking about the non-US business where there was a growth of.
Yes.
So under our non-US business, Australia and India are the two major contributors. And this year we faced supply chain issues in Australia, and that is why the quarter growth for Australia was lower. Which impacted the overall growth of the non-US market. But all the supply chain issues are being cleared, so we are very confident that growth will come back in the balance quarter.
So this Australia issue, is it lost sales or deferred sales? How should we look at it?
No, it is just for this quarter. We were not able to supply a particular product, because of our supply chain issues. And now we have resolved those issues. So in the coming quarters, we will recover large part of that sale.
Sure, sir. And in terms of the penicillin G or the, let's say, our anti-infective portfolio, are we a direct buyer from Chinese player, or are we more like buying APIs from some of the Indian player who converts penicillin G API into amoxicillin, cloxacillin?
Are you talking about supply
chain G?
Yeah. In Chile?
Yeah, yeah.
Yes, you're talking about Chile, or you're talking about domestic market?
No, domestic market, sir. So anti-infective is a big therapy for us, right? And what?
Most of our procurement is indirect. So we don't get into, component buying. But, we keep a view on various components of pricing, and the various KSMs, that are there. So that's why I said so far we haven't seen the impact of softening of these prices, from the suppliers.
And as long as, as soon as the change in the KSM or intermediate prices happen, you expect to get benefited from that. Is it correct understanding?
Yeah, that's how it flows, because if our suppliers are getting some benefit, then that gets passed on, to us. So I think that's how the market works.
Sure, sir. And last one from my side, with your permission, our current medical representative count for the India business, including and excluding first-line manager?
So 12,700 is what our count is. And managers would be over and above.
Roughly 10%. Is this what we should assume?
I think we can you can send a query and we can share the right numbers with you. But I think generally it's in line with the industry.
Sure, sir. Thank you and all the best.
Thank you.
Thank you. The next question is from the line of Madhav from Fidelity. Please go ahead.
Hi, good evening. Just had one question on the international business ex of US. I think you explained why the growth is a bit soft in Q1, but last 2 years, this business has grown at 20-25% CAGR. If you look at the next 2 or 3 years, given that we are a bit of a higher base now versus what we had before, so any sense of how, at what pace can this part of the business grow? Thank you.
So I have maintained that non-US business, we will see mid-teens kind of growth even in the coming years, and that is what we are focusing on. And we will see that coming over a period of next 2 to 3 years.
And this is a mix of entering new countries and expanding in the existing markets. It's a mix of both.
Yes.
How we should look at it?
It's a mix of both.
Got it. And in terms of the margin pecking order, this would be a similar margin business to India or higher or lower than India?
Some markets are similar to India, but some markets are lower. But at a blended level, you would see it is not as high as India, but in terms of it's not as low as US. So that's how I'll say. I mean, it's shade lesser than India, but it's not as low as US.
Okay, got it. Yeah. Okay, thank you.
Thank you. The next question is from the line of Saurabh Kapadia from Sundaram Mutual Funds. Please go ahead.
Yeah, hi. The first on the what was the growth for trade generics in this quarter?
What is it? See, we don't share the segment-wise growth, but I've always maintained that it's a substantial scale business. It grows in line with whatever we see on the RX side. So more or less, generally, we are seeing similar kind of growths on both the sides, but we do not have segment level growth data.
Okay. And in terms of the additional cost you mentioned because of a new initiative, can you quantify what could be the cost, and will it be starting from Q2 or it will be more back-ended?
So mostly it is starting from Q3 onwards. And we are not quantified and shared it, but the impact on EBITDA will be around, say, 50 basis points in the current year for say, quarter 3 and quarter 4.
Okay, thank you.
Thank you. A reminder to the participants that you may press star and 1 to ask a question. The next question is on the line of Gagan Kharija from Ask Investment Managers. Please go ahead.
Yeah, I'm audible.
No, Gagan sir, your voice is breaking.
Hello.
Yes, Gagan sir.
Yeah. Sir, my first question is around the tax rate. I think for the full year, the guidance last given was 13 to 15%. 1Q has been 11%. Should we assume that going forward in the next 3 quarters, tax rate will be 15% plus?
So it will be the range of 11 to 13% for the full year.
Okay, 11 to 13. So you're reducing the tax rate there.
Yes.
And secondly, I mean, are you making any provisions relating to the tax demand notice that you have received?
So, we have not still received any demand. So, just to give the status of the survey, income tax survey which happened. So, Income Tax Department asked us to again file the return, and we have already refiled the return for last 6 years. Now, they will start the assessment. And once the assessment will get completed, then we will come to know about the result. So till date, we have not received any demand against the survey which has happened in last week.
Okay. Right. And on the US business, have you launched Transcripts?
Yes, we have.
When was this done, sir? And what?
In Q1. We just launched.
Okay. So between Transcripts and Dabigatran, we do see US business, managing to do a high single-digit sort of growth this year, despite the 1Q not being strong.
See, on Dabigatran, because we've just introduced, we will start recognizing significant revenue only by Q3 and or Q4. Right. So from the financial year perspective, the contribution that will be there to the top line will not be so significant that it offsets the value erosion, price erosion that we have on the balance portfolio, and that's why our guidance is going to be like that.
Okay. And so final one on the domestic sales, can you give some idea of how the acute part and the chronic part of your India business have grown for the first quarter? And I noticed that on the cardio, you are still sort of going below IPM. Any explanations there as well?
No, so Gagan, cardio has never been, a very strong play for us. Our play has largely been on the anti-diabetic side, and that's where we have large brands. So that is where we have an anti-diabetic in chronic, like I mentioned, in derma, CNS, in anti-diabetic. We are really outperforming the market. So there our growth has been pretty strong. So I think that's on the overall growth. And some of the other segments, there where we have seen very high market beating kind of performances is the GI portfolio, which is our largest portfolio, and the VMN portfolio, which is our nutrition portfolio. So I think these are the segments which are really driving, the overall growth for domestic.
But if I were to split your overall domestic sales, would it be fair to assume a 85-15 split between acute chronic?
No, so chronic is increasing, and somewhere close to 19 to 20% is what we have. Chronic. Yeah.
And it would be growing well ahead of the covered market. I'm assuming covered market.
Because I mentioned, these segments where we are really, going strong and going faster than market. So I've called out those things.
Okay. And on the non-NLEM portfolio, what kind of price increases would you have been able to take this year?
So on non-NLEM portfolio, we are allowed to take a price increase of 10%, but we realize, because of the inventory, etc., and the market-driven, pricing pressures, generally we get 5 to 6%, increase on the annualized basis.
Okay. Thank you, sir. Thanks for taking my question.
Yeah.
Thank you. The next question is from the line of Bantri from JP Morgan. Please go ahead.
Hi. Sorry if you have answered this before, but just on the other expenses, excluding R&D, what has led to decline in the expense in the first quarter?
So, Vikas said in his opening statement that we have taken various initiatives in terms of cost saving. And if you look at, say, the service level penalty which we incurred last year in the same quarter, that was significantly higher as compared to what we have incurred in this year. And just to say, our production in Bati and Daman has also significantly increased, which has led to decrease in service level penalty. And we also expect that in going further in coming quarters also, there will be a reduction for the service level penalty. Other than that, last year we incurred some forex losses. When we incur a forex loss, we report it under other expense, while if there is a forex gain, we report it under other income. So this year there was a gain under forex, so we have reported it in the other income. But last year, I think it was a loss; it was reported in the other expense. And these two items have led to improvement in the percentage of sales reduction in other expenses.
Okay, so the way I understood is that this appears more to be a sustainable number. Obviously, from second half of the year, you will see increase related to our investments and, cost increase on account of that. But barring that, this number looks more sustainable.
So, see, going forward, as Gus also shared, that quarter one, generally the R&D expense is lower, and we do most of our filings in quarter 3 and quarter 4. And R&D expense in our quarterly result is reported in the other expense. So, as a percentage of things, it's very difficult when I need to compute and share with you maybe separately that what will be the percentage going forward. But if you look at one-off items, so other than say R&D, we don't see that there are many other major items. But definitely, it's very difficult to predict all the one-offs. But I think in absolute value terms, it will increase by say 50 crores every quarter as compared to Q1, and it will be in those levels.
Understood. Thank you so much.
Thank you. The next question is from the line of Yash Khanna from iThought. Please go ahead.
Yeah, hi, and congratulations on a good set of numbers. I was going through the annual report, and I was reading the MD's message where he mentioned that Alkem is set to enter the medical device space and the OTC category, which will be significant business drivers going forward. And you guys are also exploring some inorganic opportunities in this space. So if you can highlight a little bit more on this. All my other questions have been answered. Thank you.
Hi, thank you, Yash. So I think I will once again reiterate that these are going to be key growth drivers. But as we mentioned earlier as well, that we are taking steps to build this business. So when they will become meaningful, it's still a while. And, we will keep you posted whenever we have specific details, to share, in this regard. But yeah, these are really a part of plans. And in the coming quarters, we are setting up to launch these businesses. And, right now we're just, working on getting these products to market. So we'll give you specific updates whenever we have to, we have more specific details to share.
Sure, sir. Got it. And just one more. Is it then can we assume that the cash file that we have, the capital allocation can be more towards these categories versus, more towards buying out brands or something?
I wouldn't say that. We have as part of our plan, we are looking at every opportunity, that comes on table. I have said it in the past. We are open to, and we are actually looking forward to, any acquisition that we can do that can add value, to our overall scheme of things, and which are more strategic in nature. So, we have today a cash of a decent cash reserve. So I would say, and which is, I think, and whenever any opportunity comes our way, we can figure out the routes to funding, to get those, to engage on those opportunities. At this stage, there's nothing more that I can share, but I can just tell you that there is a very strong intent to, look at inorganic options as well.
Sure, sir. Got it. And best of luck.
Thank you. Thank you.
Just to add on other expenses, like I think to the previous question, I answered that there will be an increase of 50 crores for the R&D expense on top of quarter one. But as we also discussed that there are other initiatives, growth initiatives which we have taken. So for those initiatives also, there will be another 50-60 crores of increase over quarter one. So altogether, other expenses may increase between 100 to 110 crores on the base of quarter one for balance 3 quarters.
Thank you very much, sir. The next question is from the line of Tushar Manudhane from Motilal Oswal. Please go ahead. Hello, Tushar, sir.
Yeah, am I audible?
Yes, sir. Please go ahead.
Yeah. So just on the MR trend, which has been largely stable, that as a part of cost rationalization exercise, are we going to see the reduction in number of MRs as well by the end of FY25?
No. So MR is, you will see increase in productivity. That is our focus rather than reducing, people. I think there are assets and, we are seeing strong traction in our, performance because of our feet on ground. So there is no such plan, but there will be a definite increase in productivity.
Understood.
There is a substantial increase that we have, as part of the plan in the numbers, but we will see a improvement in productivity.
Understood. And if you could share the OpEx related to Enzyme Biosciences?
Sorry. OpEx related to Enzyme Biosciences?
Yes.
So in quarter one, there was an expense of around 90 crores as OpEx for Enzyme, including the depreciation.
90 crores including depreciation. And how do you see this time for full year FY25?
It will increase a bit as we discussed that we are also building our US plant. So some amount of expenses, since that plant will be operational by end of FY25. So definitely there will be some pre-operating expenses. So there will be, against the first quarter, the balance quarter, there may be increase of 20-25%.
Sorry, 20-25 crore per quarter, right? Is that or for the remaining year you said?
Yes.
Understood, sir. Thank you.
So when I said that the other expenses will increase, so I think that is already covered. This part is already covered.
So that is to do with, apart from Enzyme Biosciences, as in any other levers you would like to call out for increasing, let's say, OpEx, which will, keep the EBITDA margin at the earlier guidance level?
So we have also entered into medical devices. We have signed an agreement with one company in US from where we will get the technology for hip and knee replacement. And we are getting into these features, and definitely will take some time to break even. So this business will also actually impact the EBITDA margin in the current year.
Okay. So just on this medical devices, this would be more as a hospital, as in B2B products, or this would be more like an OTC product?
So these are mainly currently the agreement that we have signed. We will get technology for hip and knee replacement. So we'll be dealing with through distributors. We will be promoting these products to hospitals, and hospitals will actually implant this in the patient.
Understood, sir. Thanks. That's it.
Thank you. A reminder to the participants that you may press star and 1 to ask a question. The next question is a follow-up question from the line of Kunal Dhamesha from Macquarie. Please go ahead.
Hi, sir. Thank you for the opportunity. One on the EBITDA margin guidance. I think I'm a little bit confused here. So the gross margins are expected to improve by around 150 basis points year on year. And then at some point we said there will be 100 basis point incremental spend on the new initiative. And then at some point we said 50 basis point incremental spend in quarter 3 and quarter 4. So yeah, I think I'm misunderstanding something. But how much is the new initiative spend that will kind of offset gross margin improvement for us? And then the cost efficiency initiative should also kick in, right? So yeah, how should we think about it?
So as we said that the gross margin for the full year is in the range of 62 to 62.5%. And also I said that for quarter one, the other expenses will increase by say 100 crores every quarter, mainly because of incremental R&D expense because quarter one generally our R&D expense is lower as compared to other quarters, and also because of investment in our biosimilar and medical devices business. So other expenses from on top of quarter one, it will increase by around 100 to 110 crores every quarter.
And that will include everything, right? R&D, new initiatives, everything. 110, 100.
This is what we are expecting. The final number will come only after the actual results are published, but this is what we have estimated.
Sure, sir. And one more question on the seasonality. Since we still have good amount of acute exposure and we are roughly 1 month into quarter two, so how is the acute seasonality playing out for you this year?
So the IQVIA number is yet to come out for the month of July. So we are also equally waiting, but I can just, it will be too early, but it is much better than, what it was last year.
Sure, sir.
Thank you. The next question is a follow from the line of Yash Khanna from iThought. Please go ahead.
Yeah, hi sir. Thank you for the follow-up. So you mentioned about improving productivity of the MRs. So if you can tell us what is the console productivity and then break it up in acute and chronic, and also what sort of a productivity improvement are we targeting going forward?
So, our consolidated productivity is at around 5 lakhs. Okay. And, whatever, we are not looking at any significant addition, to the numbers that we have. And we have a, top line growth aspiration of close to 8 to 10%. So you can see, that would be largely the productivity growth.
Sure. And so if you can break it up of chronic and acute.
So segment level, we've not, but since acute is higher, you can, consider, say, a 10-20% higher productivity for acute, and chronic is not way low now. So I would say it's catching up, but maybe 5 to 10% lesser than our consolidated level.
Right, got it. Thanks for this, sir, and good luck.
Thank you.
Thank you. Participants who wish to ask questions may please press star and 1 at this time. As there are no further questions, I would now like to hand the conference over to the management for closing comments.
Thank you. We'd like to thank everyone for participating in today's call and making this a meaningful discussion. If any of the queries still remain unanswered, please feel free to get in touch with us. Have a great weekend ahead. Thank you.
Thank you. Thank you, everyone.
On behalf of Motilal Oswal Financial Services Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.